All right, everybody, welcome back to another Forex Market Preview. My name's Jason Stapleton, and this is going to be a very short episode. My house has been plagued with everything from the flu to pneumonia in the middle of the springtime. Can you believe that? Well, because of that, I have been basically out of the loop for the entire week. I was in the office on Monday, and then, of course, was out the rest of the week due to, not my illness, by the way, but others in my family being sick. So we're going to combat that this week with a short Forex market preview. I'm just going to show you a couple of things and hit on a couple of points, then I'm going to let you go. The first thing that I want to point out to you guys or hit you guys up on is we talked about this a couple of weeks ago, I think. Actually, it might have been last week we talked about this. Potential cipher pattern setup here on the JPY. Now, one of the things that's unique about pattern trading is that a lot of times guys think that it has to kind of fit the mold, that it has to look right, it has to look like a pattern. When in reality, any time that the conditions are met, we have a valid trading opportunity. So here on the dollar-yen, we see that the market came down. We had what we were looking for was a press up. As the market came down into here, into this support level, what we were looking for was a press up into the 786. Now, we didn't get that for a while. The market traded sideways. Then we shot up, and we hit that 786. That instigated or instituted a sell limit right there at 102.16. Now, the market traded just a hair higher. We came right back in to test this previous resistance level, and then the market rolled over. Target 1, guys, scored about 37 pips. Okay, so 37 pips of profit. And target 2 down here at the 618. If I just draw these in for you, just grab my Fibonacci retracement, swing low to swing high. And you're looking at 37 pips to the 382 and 80 pips to the secondary targets. Now, I get a lot of guys who say, well, how do you pick the 382? Well, if the market turns on a dime right here, what you would expect is to sell 102.36s and to pick up, the 382 at 101.58. Well, the problem is the market didn't do that. It continued higher. So as that market tracks higher, I'm just going to continue to draw out my Fibonacci retracement until the market actually finally either stops me out or rolls over. I actually got a comment on the YouTube that said, well, you can't just keep drawing the Fibonacci retracement up as the market moves higher. And I'm not sure if that was the voice that I imagined him using when he was telling me how to do Fibonacci trading. But as a matter of fact, whoever wrote that is exactly how you do it. That is exactly how we would track that for potential targets here. So we're just going to continue to drag out here until the market hits that high note and then rolls over. Now, does that mean that we're going to sacrifice some potential profit on this trade? Well, absolutely it is, because as you can see, the 382 retracement is a lot further away if we're down here at the 786 than if we drag all the way up here. So, but we still grabbed 37 pips of profit. Now, why we do this, the reason we do this is it's not for no reason, is because we've done a lot of testing on this, and we find that there are a great deal of times that market will pull back just to that 382, just from that high water mark to the 382, and then reverses on a dime. When that happens, we want to make sure that we're out of the position. So that's why we do that. But that's exactly how you do it. You drag low to high, and then you wait for that market to roll over. Now, sometimes it doesn't. Sometimes it just continues higher, and it's going to stop you out after we violate the original highs here. But let's go ahead and scroll over to what's happening currently in the market. This is kind of neat because the market has come down, boom, and we pressed back up into, and we formed a little wedge pattern here. And this is a lot easier to see if I bounce down to a 15-minute chart. What I'm looking for here, guys, is I'm looking for the market to break out. And guys, I don't really care which way it does it. We have basically this is a flag formation, a pendant formation. Good grief. Market shoots up, then we form a little pendant here. And now we're waiting to see which way the market is going to go, whether it's going to break out to the upside or whether it's going to break to the downside. Whatever it does, that's generally the position that the market is going to take. So if we break to the downside, we would want to look to be sellers. If we break to the upside, look to be buyers. So that's what's going on here in the JPY. Let's talk. Let's go back out to the 4-hour chart and let's go over to Aussie dollar. Aussie dollar not doing what we wanted it to do. We actually broke through those lows, came back up into retest the support level we've been watching, and now the market has rolled over again. We put in a little double bottom here with bullish divergence, but at this point, I don't know where this thing's going, so I'm just going to leave it alone and go to greener pastures. Taking a look at Canada. Canada's had a nice break down, and we just made a break below, close below here. I'm looking at this previous structure level. If I come back here, you guys will see it. You've got the previous kind of support level here, a little false breakout, then you've got resistance and resistance here. That's coming in about the 1414 extension. So there may be an opportunity here for a counter trend trade right about that level. However, there is no Fibonacci retracement in here. So not a lot of things pointing to this right now. But what we could see over the course of the next couple of days or day, we may see this market drive down in here, and we may have a very oversold situation at structure with a 1414 Fibonacci extension. You know, those of you who are CTS traders, that's a a valid long opportunity there. You can give that a try. Let's look at the euro. Euro out on the daily chart may be setting up a massive bat pattern. Looking for a press potentially back up into 136s. Now, the reason I say that is because we're actually kind of held up here at the previous resistance level. I think we closed above by a pip or two, maybe. But if I come down here to the 4-hour chart, you're going to see this market here coming up and actually closing above these previous resistance levels. So, the structure's been broken. The question is, will we see any follow-through on this particular trade? And if it does, where's it going? Well, we know from our skills as pattern traders that this is what we're looking for. The high probability sell at this point is this 136's area. Now, I don't know if we'll get there or not. The market may do something hokey in between, but a very nice bat pattern setting up there. Let's go to pound. Pound is kind of doing the same thing. There's actually a bat pattern in here potentially. The difference here is that the market held the 156s. Now, the 156s is actually a pretty significant level from something that we were watching from a long time ago. We've got this resistance level down here around 153s. We've had a lot of support along that. Market broke through that. We traded down ever so slightly, and then boom, popped up again. So this has been a rather, this is definitely setting up to be potentially a nice trade if we can get a little higher. If not, there's a counter trend trade, most likely, down here on a lower time frame. Let me just look at it. So if we can get, and actually we had to break a structure on the lower time frame. We had to break above, close above. So you're actually looking at potential trend continuation trades here. If you get a double top here, bearish divergence, market was overbought, there's a potential counter trend trading opportunity here. And 2618 traders, keep an eye out for that as well, because that may be a really nice setup for you guys as you move forward. Now, guys, if you don't understand the verbiage of the nomenclature that I'm using, most of these guys who watch this video have been with me for a long time. Most of them have taken courses or have been part of the free trainings where I teach about a lot of this stuff. So if you're new to it, just hang out, because you're going to learn the nomenclature, you're going to learn the verbiage as we go along, and before long there's going to be an opportunity for you guys to take some free training from me when I offer it, to learn some of this stuff, and it's going to start making a lot more sense to you. So just stick around and start watching what I'm doing and listening to what I'm talking about, and it'll make a lot more sense. Potential cipher pattern, euro-yen, looking for a completion around 129.76 is for a sell. That is a bearish cipher looking to sell. 60-minute euro-yen, 129.76, pattern completing. And most of these, this is kind of interesting too, Aussie-yen. The way this thing has just kind of petered out here. Again, I'm going to drop down to the 15-minute chart the same way we did on the yen. I'm going to collapse my chart up here, and look at this. This is what I want to pay attention to. Okay? I don't really care which way this breaks out. I just want, when it breaks out, there's typically a trading opportunity in the direction of the breakout. So keep an eye on that. That's Aussie yen on the 15-minute chart. That I think is it. You know what? That's all I'm going to talk about today. There's more stuff that we could cover, but I'm behind, and it just doesn't make a lot of sense to to ramble on through this. There's a couple of good trading opportunities in there, a couple for you guys to watch, some not advanced patterns, but some basic pattern formations that you guys can watch for those breakouts, and just watch what the market does. Don't trade it this time if you're new to it. Just watch what it does, and pay attention to that particular type of setup when you see it, and start recording it in your trade journal when you see it. Which way it broke out, what the what the pattern did, how far it moved, some of that type of stuff. Just keep a nice journal. If you're not doing that, you're wrong. You need to be keeping a journal that showcases these particular pattern formations and what they're actually doing. So that's going to do it for this week. Until next time, guys, good luck and good trading. Don't forget to sign up if you don't get this on a regular basis. If this is the first time you're coming here, just to the right of this, you're going to see the sign up form. Make sure you sign up.